Welcome back, everyone, for another episode of Debits and Credits with Haas and Dawe. And today we're going to be moving on to an accounting topic and how to come up with some good best practices for small businesses in the title and escrow industries with working with their daily and monthly and annual accounting practices. Good bookkeeping saves you time, it saves you money, it reduces stress, it makes it easier for you to operate. When your bookkeeping is done in a timely fashion, neatly organized internally, whether you're using an internal accounting person or whether you're using an outside bookkeeping service, it makes it easier for you. On the one hand, it makes it easier for us as auditors because then we can go through your books and records faster, more efficiently, which costs you less. On your side, it makes it easier for you to know what's going on. What's your financial situation? Are you making money? Are you losing money? How's your cash flows? All these matters come about when you choose the right accounting person or the right accounting software for your needs. Now, again, dating myself going back to 70s and 80s, before we had the advent of computer systems and personal computers and some of these software packages of today, people had outside bookkeepers, or they would do it internally with a bookkeeping system, and everything would be recorded and it would be on paper, and we would be able to do the audits off of that. Well, in today's world, it's a matter of choosing an accounting software that fits your needs. What's the best for you? And it can be something as simple as a QuickBooks concept or a Wave concept, or getting into more sophisticated software systems that were used to be called Peachtree, now is part of Sage, or a Mass 90 system. These are all different software vendor names of that adopt to larger company sizes. But at the end of the day, it's something that allows you to record money coming in, allows you to record money going out, so you keep track of your cash flow, and also translates into financial statements that let you know whether you're making money or losing money, what your balance sheet looks like, what your profit and loss statement looks like, and so on. And so many of these features today are cloud-based, so you don't even have to have a specific desktop per se with the software on site. And these cloud-based features allow you to do so many things electronically, automatically, without even thinking about them. Where you then allows you to access the records anytime, anywhere, and move forward. Because you can set up a relationship with your bank and with your credit card company, where whenever a transaction hits the bank, it automatically flows into your accounting system. It's an integration concept. Same thing with credit cards, where every time you have a charge on your credit card, it automatically goes into your accounting system. And so at the end of the month, the liability of what you owe is already in your accounting system. Now, one of the advantage again is to reduce the amount of manual entries that have to go into your system, where you have to sit down, and whether it's the old way of doing it with pen or pencil on paper, we're doing it a little more modern where you're sitting in front of a computer, but you're having to input items into the system using your mouse, using keyboards, and so on. These are all ways to be able to make this a more efficient process. And another advantage, selfishly on our side, is that with a lot of these software systems, we get access. Meaning we can't go in and change the transactions per se, or try and take money out of your account, or write checks, or cause money to be debited out of your account. But it gives us access to be able to see what your transactions are. So at the end of any accounting period, whether it be at the end of a month, whether it be at the end of the year, you don't have to come out and print out stacks and stacks of pages for us to use. Or you don't have to go in and download or upload for us. It's a situation where we have access. We can go in and create the download for ourselves automatically to get the data we need. All these things will help make it easier to use the software, to report the software, to report the transaction, to get information to us so we can do our audit or tax return. It doesn't necessarily have to be only on an audit situation. It can be where we're just doing the books and records at the end of the year for a company that's not required to have a financial statement audit, but where we can do the tax return from that information. Now, here are things to consider in coming up with your software program. Whether it be, is it going to be something that's going to be a desktop version? Is it going to be an online version? Is it going to be something that has easy access for other users within the company to be able to gain access? Is it going to be linked to your bank? How easy is it to use? And it's one thing to go and get a demonstration done on some of these software programs, but take this with a grain of salt. because the people giving you the demo, they know how the software works. They know what buttons to push, they know the bells and whistles, and they know how to make it pretty for you to try and sell you the software. So be careful about that. You want to ask that someone say, well, let me do my own. Let me write the transaction. Let me input a deposit. Let me input a credit card payment. How do I allocate the expenses over the different accounts and so on, so that you have a touch and feel for what's going on. What reporting gets done, whether it be something that's getting information to us, or something where you're trying to produce a financial statement for a bank, or something your regulator needs to see something. What customer service do you get? Can you call up and not get stuck in a long queue of other people calling up on how to use the software? That's very important. You want to be able to have efficiency and timeliness of being able to use the service. HR considerations, meaning if you're going to run payroll through the company, what about some of the HR uh, costs that have to come into this, such as payroll taxes? And are they going to make the payroll tax payments for you automatically, or is it something you still need to transmit on your own? Are they going to produce the payroll tax returns for filing to the government, or is that something that's your responsibility? Can they help with tracking paid time off, or tracking vacation sick if you keep it separately, or tracking retirement plan contributions? All these things are from an HR standpoint. That does it have the software or the company, the vendor, have the capability to do this for you? What are the benefits and the services versus the cost and time? If it's something's gonna cost you $14, but then it doesn't do anything for you, then that's not being beneficial. That's being penny wise and pound foolish. Or if it's something where it costs thousands of dollars, but then it doesn't give you the services that you need, then that's not very efficient either, because then you have to start all over again. And you want to make sure that when you have the conversation with the vendor, that it will satisfy your needs. It may be that this program is very good, but it's very good for an air conditioning contractor company and not very good for a service business like an escrow company or a title company. So you want to make sure that it's doing what you need it to do for you. Otherwise, no matter how nice it is and all the bells and whistles it may have, if it doesn't float your boat, so to speak, for what you need, it's not going to work for you. Now, cleanliness. When you have these accounting systems set up, now it comes to you to get the input done on a timely basis, entering and paying bills, entering the deposits, reconciling the bank account, dealing with the credit card statements. They come on a monthly basis. Now, whether you have an integration concept set up where everything that hits the bank statement automatically dumps into the software system, or everything you charge on a credit card, on a debit card, automatically integrates into the software system, if you're not reconciling the bank and you're not catching whether everything is coming through that you need, or going in every time after you get a credit card statement that you've checked every charge on that credit card statement is in your system, and vice versa. And so you want to be consistent on a schedule for yourself, whether it be daily or weekly or monthly. There are some people who will reconcile their bank every day. Some will do it once a week, and some will do it just once a month. There's no wrong answer on that. In that, whichever comfortable for you, whatever the volume is. It may be that you go look at your bank statement every day online, and therefore you don't necessarily have to do a full bank reconciliation until the end of the month. With the credit card statements, you want to review the credit card statements as soon as they come in, not just put it into the accounts payable column. That way you can see, are there any unauthorized charges on your card as they happen. And then you want to review your financial statements at least monthly. The financial code for escrow companies requires that all financial statements are reviewed at least on a monthly basis. So you want to see what's hitting the financial statements. Do the expenses make any sense relative to what you're expecting? Is the revenue what you thought the revenue would be from what the fees are closing and so on? And you want to make sure you're checking this information out. If you're management, you don't want to delegate this all the way, because you don't know who, if there's something going awry, you don't want the bad person being in charge and being able to cover up more of it. It's like the thing, you don't want the fox in charge of the henhouse. Now, also, you want to be able to organize your documents, and um, from an accounting standpoint, as you're going through on a monthly basis, you want to make sure you have an organization system. And it may be that you want to keep all your deposits in one file. It may be that you want to keep all your checks in a chronological system where you have a folder, a file folder, or whether it's digitally, month by month. Or you may feel more comfortable going vendor by vendor so that all your bills to the telephone company are in one file. All your bills for utilities are in one file, and so on. And if that makes it easier for you to find an invoice that you're looking for, then that's what you go with. And you just keep going from that regard so you can always find whatever you're looking for. That makes it easier for the audit, again, selfishly to us, that we can whatever we ask for, you can find, or if need be, we can go find, depending on your system. Um, Contracts, any contracts that need to be signed for a copier lease, for a purchase of an automobile, any type of where there's a contract involved, includes a lease, even the office lease. That technically is a contract. You want to make sure all signed copies are kept in your file system. And again, these can be digital. Now, checks deposited, depending on your volume, that you want to make sure you're keeping a copy of the check that's being deposited. Now, in today's modern system with the banks and their scanning system where you're scanning in the deposits, they should be keeping a record of the deposits. They'll keep a copy of the checks. They'll make sure that the deposit totals out right. And at the end of the month, when the bank is reconciled, the deposits will be there, easy enough for you to mark off and are ready to be reconciled within the banking system. Now, we talked about storage and paper and so on, and we just emphasize you can keep records digitally, and as long as they're what they call a write once, read many type of format, WORM, write once, read many, that you can find whatever you had before, that's fine, and that's okay with the regulators. If it's something they're more comfortable keeping paper, then that's fine too. But that's up to you as to what your comfort level is, because you can keep track of your records on a digital basis and keep track of your records and your receipts and deposit tickets and so on. And once you feel comfortable that everything has been stored properly, perhaps even after the bank reconciliation is completed, then you can destroy the paper copies. Um, why does all this matter? It matters from an audit standpoint, from ourselves, with whether it be an IRS or an FTB, Franchise Tax Board audit about taxes, what's coming from the regulators, this Department of Financial Protection and Innovation, or the Department of Insurance, Department of Real Estate. All these agencies, if they come in to do an audit, the more record keeping you have, the more impressed they'll be, and the happier they'll be, and the sooner they'll get out of your way. Now, it's also record keeping is also important relative to any lending practices, meaning if you need to borrow money from your financial institution or you want to set up an unsecured line of credit with the financial institution, you want to have what's known as an approval process where you can just get to the lender copy of the financial statements, copy of bank reconciliations, and so on. It makes it easier. Segregation of duties. Now, this is something that's again more of an audit issue, more of a concern we're going to have. If you have an internal bookkeeping function, you want to make sure that certain people cannot continue to do this, cannot continue to do the same thing. You cannot be in control of all the money because you don't want somebody who's paying your bills to be able to sign on the bank account. You don't want the person who's signing on the bank account to reconcile the bank account. You don't want people who have access to the credit cards to be paying the bills. I mean, these types of things. With payroll, you want to make sure that with payroll that somebody hasn't created what they call a ghost employee, where they haven't come in and created an employee within the accounting system, but you never look at it because you've trusted it to this person who's in charge of payroll, and she's created employees that don't exist because it's all goes to this employee. So you want to be careful that you have an oversight when it comes to payroll, that you approve all new employees, that you've seen how the new employees are logged into the telephone, logged into the system relative to who can get paid and not paid and so on. You don't want people getting a raise that they don't deserve, or people faking employees. Um, and so there's a lot of these things that you want with the segregation of duties that have to go on. I think that's the gist of what's happening with bookkeeping and accounting and why it's important and how you can do it. And it's something that you can contact us or any other of your consultants who can help set up a payroll system and a bookkeeping system and a bank reconciliation system. All these things dealing of the overall picture gets to financial statements. We'll see you next time on the next episode of Debits and Credits with Haas and Dawe.